Welcome aboard, and let's have a look at what's happening in Melbourne in the COVID property market. It is, as we would all know, like no other, and certainly not during my time with property. There's a few comments down the bottom there. We need to be licensed just like real estate agents, and that's a very important point, because when we're standing eye to eye with a real estate agent, negotiate our deal, we know what they know, and it certainly levels the playing field compared to most buyers. So what I'm going to cover today is the effect of COVID-19 on housing choices. So that's a particular term, they're choices, because there's things that have happened that have changed what people are buying. The state of the new normal market, or the market that we're going to have, we've got to go through a few more steps before we get to being able to inspect again. Right now, property inspections are not available to anyone. The agents can't list the properties. They can't go into a home to list the properties. They can't show the properties, and people like me can't go and inspect the properties. So it really is gummed up. That is meant to come up on the 26th of October. There's massive pressure from the property industry to try and make that earlier, perhaps the 28th of September, because as far as we know, no one's been infected doing a property inspection. So I'll talk also about the trends I see coming, the property types that I see as good buying now, and a sample of some client purchases. Now, firstly, I was going to show this guy because it's one of the ones I've included in my newsletter. Is he actually excited about getting out of lockdown, or is he excited about buying a property? We don't know, but hopefully it's buying the property. Just a snapshot of what's how values have moved since these things, the new COVID situation came in. You can see there that I'll just move my own picture window, and the past 12 months, we've actually had an increase in Melbourne property. So we, of course, had a lot of momentum coming up to February and even into early March. And then, we hit the wall, really, and we've had decreases in the past 3 months. But in fact, people who bought a property 12 months ago from now, on the median in Melbourne, which is a big lot of suburbs, are still ahead. And there's an interesting one down the bottom, regional Victoria, hasn't really changed all that much. You can see that, and I'll go into a bit more of that later on about the influences that COVID's had on the real estate market. So a few things to take into account. Listings dropped, of course, and they were running out. People inspected properties, so agents could sell those properties online. Once you get a property listed, property inspection by buyers, everything else can be done electronically, and particularly Julian will talk to that later on with the conveyancing side. But obviously, property has gone so electronic in the last few years that it's really just me getting inside the property and then the client following up to see the property. That's the trigger, and then we've got a target property to go on from there. We've got some discounting in the inner zones. Melbourne's considered to be a 10K zone, a 20K zone, and further out. But the discounting is coming in the inner zone at the moment, and they're the most expensive properties. September to the third step, 26th of October, maybe earlier, we've got problems with listings. We've got online auctions, of course. Anything electronic can go ahead. We've got cheap interest rates below 3%. Patrick will talk a lot more about that, but lenders are being very careful. And the ideal time to buy property, anytime, the advice would be the ideal time to buy property is when prices are level or they're declining. When they're going up, you're chasing the prices all the time. And so now is a good time, providing you're financially okay. And a wisely bought Melbourne property, this is going back over many years. He's got around about an 8% growth rate if it's well chosen. And investors, of course, can still get negative gearing and capital gains discounts. The trends I see coming out of this era, based on Corona, is that this is a health issue, is that high-rise towers are becoming less popular. I haven't bought many properties at all in high-rise towers. I'll buy mid-level, maybe 5 levels, but high-rise, we're talking 10, 15, and they are going to become less popular because of crowding in lifts and crowding in hallways with a health issue. Single dwellings, townhouses and mid-rise will become more popular. That's the converse of the first one. Unemployment, investors are gone cool. They really have gone cool because they're worried about having a tenant. So that's absolutely critical for them. So that'll take a while to resolve. Work from home influence. The work and location has been decoupled. People used to say, I need to live near this suburb because of my work. I need to live near the city to reduce my commute. That's all going to change. I was reading today that the most likely mix is 3 days at work, 2 days in the office, or reverse. Larger houses will be sought out because they, I think I've lost a word there, but that's to fit in the working from home office that a lot of them don't have. That's like a separate one. Larger houses on large blocks, I think that one said, but the extra bedroom and maybe on the urban fringe because living near the office is not as important anymore. And prices, well, new buyers will be incentivised with lower prices and lower rates. And of course, rates are very low. Inner suburbs will be discounted, good for upgraders. So you want to move in, that will be the time to do that. I think my pictures here are flicking a little bit. And incentives, buyers will be incentivated by stamp duty discounts, the 5% deposit scheme and home builder, which can apply. So where's the good buying now from my point of view? Well, first home buyer property is clearly one of them because the stamp duty is a very significant saving. At 600,000, it's none, and at 750, you're back to full rates. So there's a 5% deposit scheme now run by the federal government, and loans are incredibly cheap. So first home buyers are piling in. They say that the actual search for first home buyers has gone up 60% since this whole thing started. Repeating perhaps the other one, healthier suburban properties further out will be popular, and they make good buying now because people will want them. They mightn't realise it yet, but they will want them. And properties of a similar value. So if you're changing within Melbourne at a similar value, you're not really disadvantaged by any slump in your current price because you're just in the same market. Regional houses will be sought after. The median's 420. That's a lot of cities. I only really encourage people to buy in the larger regionals. Obviously, you've got less deposit. You've got less stamp duty. You've got a work from home benefit. If you live there, you can still work in the city because of all the technology. And the increment, the gain, the capital growth of the regionals is quite steady and steady up. If you've got a lot of cash to buy the property, you can do amazing deals because you don't have to borrow as much, so there's no big loan issue, and you can really use a lot of leverage in the negotiation stage. Dual occupancy sites, I was looking for one of these earlier this year. They can be bought at a discount because a lot of investors have vacated the field and they have to get that finance to do the development, where they might not be able to get. And the last one is commercial property. Things like data centres, warehousing, and essential manufacturing and smaller office blocks are all really popular now. Converse is some of the other things are not popular. It's like the big offices in the city. So if you were a first home buyer, where's the no stamp duty virtually for all these? Well, there are a lot of suburbs that would give you no stamp duty. This is just an eastern suburb selection. I'm based in the east mainly. Lilydale, I have not bought. I've certainly bought Ringwood, Ferntree Gully, and Bayswater, Croydon, and Boronia, and maybe Ringwood East. I can't recall, but certainly there's a lot of unit prices. They could be apartments, or in the outer they could be villa units, and they're available to purchase under 600. Therefore, no stamp duty. But of course, there's always risks. And buyers can lose. I'm a cyclist, but I certainly wouldn't cycle what's on that picture. Buyers can spend hundreds of hours on search and never find the property they want, especially while stocks are low. And of course, incredibly low. We had a report that I think it was in a week. Recently, we had 100 auctions, and there's normally 600. That's just incredible. It just means that people are not auctioning properties. A lot have gone to private sale, but they're hard to sell as well, given the situation. People don't know necessarily how to do due diligence. We've got a 6-step process that's rigorous, and they can end up buying a mistake and a problem. And in fact, I got a call yesterday from someone that's bought in Ballarat with a lot of problems. And I've referred them to Julian. I'm going to ask you, I'm not sure if he's talked to them yet, but there's a lot of problems with that purchase and they shouldn't have happened. So you need to do that. You need to know how to do it. And they also can lose through lack of negotiation experience. They could overpay when prices have gone down. They could be paying old prices, or they could lose the deal because they just don't react quickly enough against someone else. And if they've got little or no bidding experience, I've bid on Zoom, as well as I'm very familiar with bidding out in the street, but you can miss out because you haven't got your strategy right, you haven't got your tactics right, and you haven't got your pricing right. So there's 8 common mistakes. There's probably more, but this is 8 that I think are quite important to know about. One is the lack of a brief and objectives. I go through the brief with clients and it's quite forensic. We end up with 15, 16 lines, number of bedrooms, bathrooms, square metres of land, it goes on. We've got to get that right. Otherwise, we're not focused on what we want and we don't get there. We have people with finances not ready and asking me to buy. Well, I send them back to get the loan organised. That's deposit. We need pre-approval and servicing ability. We'll hear more about that from Patrick. Some people are just influenced by the market, things written by people in newspapers that don't even buy property, and they're just saying things they've heard. Don't worry about it. People who buy on emotion, that's where we're bidding for clients. We have a pre-agreed limit. We bid to that limit. That takes the emotion out of it, where they could overpay. The other one is not understanding there are many ways to buy. People think that if something's put up for auction, there's auction. No, there's actually 5 ways. I won't go into them now, but there's actually 5 different circumstances. And Julian will understand that because it's legally based. It's not all about the price. There's a lot of other things that come. It's your living, it's your future, it's location to work, it's location to family, schools, all those other things. Price is just one thing, really. So there's a great quote, price is what you pay and value is what you get. And if you value those other things, that's not in the price, that's the value. And not using a team is a mistake. People think they can do it all themselves. Well, they just don't have the experience. I mean, I can't go and do what the structural engineer does because I haven't trained in that. And they shouldn't think they could come and do what someone's worked in property for a long time and buying for people. So they really need to get a team, and I've got a diagram on that in a moment. Misunderstanding the real estate agent's role, that's a big one. After talking to an agent over and over and over, they start to get this Stockholm syndrome and they think the great agent's their friend. Well, no, they're working for the vendor. And fed up purchases, this happens during a boom time. People go and miss out, and then they go and bid and they buy crazy, they buy a mistake or they pay too much. So don't do that. So here's how we help clients. We can have meetings. We have physical meetings, used to 40 minutes. Now I'm doing Zoom 20-minute meetings. If people are thinking of buying, we just work it through, no cost. We have a commencement fee, $1,500. We have a success fee, depending on what you're buying. We go into the search phase. We do shortlisting, client inspections of what we've found. We get a target property. We do the due diligence. We go for acquisition, negotiating, bidding, and then into the settlement. That's over to the lawyers. So, but I watch it right through settlements. That's a very quick snapshot of how we do our complete buying service. And this diagram just tells you what comes with me when you become a strategic client. All the things I've got around the top here, the things that I bring to the table, that's the value I bring, licensed, experienced, etc., etc. But we've also got a lot of contacts built over time, good people. 2 of them are here on screen tonight with us. Gardens, architecture, town planning, building inspections, all these things you may need, not all of them, but you may need them in doing your transaction, and you really need to use good people. And this is the strategic funnel. So once people sign on, this is the method in which I find the property. Across the top here, silent sales, connections with agents, lots of off-market properties at the moment. That's a real feature. We do the normal search, of course, but agent networking is very important. I want to know what's coming up, not what's on the web. And we get tip-offs. And of course, for interstate buyers, I've got my colleagues in Brisbane and Sydney. We vet down. I look at a lot of properties. I eliminate a lot on the screen, some when I'm there, and then get the client to look. and we get down, eventually vetting down to shortlisting and targets, and we do the due diligence and go into buying. Now, if we get that property, it's a done deal. It moves on to the settlement process. If not, bing, up to the top again, keep pouring it in the funnel. We will get there. We will get there. That's the process. Now, I just wanted to quickly run through some purchases, some examples of purchases. And I'll be very quick about this because we will give you the video. But this one's Port Melbourne. I love this property because it had such an enormous deck, 24 square metres. This is quite unusual. It must have been just part of how the architecture went, because you look at the one above, it doesn't have it. Sunny, great aspect. Walk to the beach by walking down, it's called Knott Street. Walk down the street, you're at the Esplanade. Tremendous. Once I saw it, we had to get it. I found it on Friday and we went full bore and bought it on the Monday. So client was very delighted, and they gave me this fantastic testimonial down the bottom and said that we've made a stressful process successful for them. This is another first home buyer, which ended up as a one-bedroom apartment in a Gurner development, which is a quality development, 47 square metres and balcony. You've got to get the loan right for that. But it's still got a builder's guarantee on it, and it's the location. Look at those locational things: botanical gardens, tram, train, wonderful. So my client also commented back that that was delightful with the outcome. So it's great. This is one of the reasons I'm in this business. I love people to have great property outcomes. This is bought for Sydney investors. They flew down a couple of times. I inspected, and eventually got this one. It was private sale, and I don't know how it came about, but I bought it for $1,000 more than someone else. The agent just wanted to move it, I think, and we bought it. So you can see the city from those windows there, from the little deck there. So that was wonderful. This one's in Ballarat, one street, Dana Street, one street from Sturt Street, if you know the city, and one big block from the main street. So that's very central, and not modern inside, but it's certainly renovated inside, and it's gone up, up, up. And that city of Ballarat and Bendigo are doing very, very well compared to Melbourne, particularly at the moment. And this one's one I had to bid hard for at a big auction. It was a merchant builder's home built in the 70s, and there's people who are really keen on that style, and they had massive numbers of people through. I was worried that, how am I going to buy this thing? They had so many people inspecting it. Anyway, we went in with it was my job to work out what this is value, what's the value of this property in the market, and get the budget right. And I did get it right, and had to bid hard and bought it for them. Now, you'll notice down the bottom, this was bought for downsizers. So I then had their property that they needed to sell. So we had that all set up and ready as a vendor advocate. And as soon as we bought this one, we pushed the button on the sale. So we had them crossing over. And this one, the last one, is an investor development purchase. So these people wanted a block to develop, to knock down that house and build. And but even if they didn't, it was quite livable. But you can see it's 837 square metres. So this is one of my objectives, to get a developable block. And just as luck would have it, Purple Brick spent $20 million advertising on television in Australia, and they weren't successful. It was a bad business model for here. And they pulled out the very time I was looking at this property. So I thought, wow, what a gift. This guy wants to get rid of it. It's closing down. And we did. We bought it. So my clients, we were quite fortunate to buy that very, very well. So this is the last one. This was bought for a Sydney lawyer, second time round client for me. A double brick Edwardian in Flemington Hill, all based on heritage, that one. So just to finish off my bit, if you're using professional assistants to buy a property, make sure you're licensed with Consumer Affairs. There's a few fake buyer's agents out there. Make sure they're in the REIV buyer's agents chapter. They know the type of property you're seeking. They've got the market knowledge and experience, and they have a success fee and not a percentage, no, a fixed fee if they're successful. There are a couple of people around doing percentage, and I just think it's nuts. That's for selling property, not for buying. Don't overpay just to complete the purchase, and make sure you enjoy the person you're working with, because it's quite a long journey. And My philosophy, secure the property you need and get out there and enjoy the world when we can get out of this place. We can't fly anywhere at the moment, but certainly we like to get out and enjoy what you can here and there. And these are just as you'll see this on the video, just the range of things. I don't just stick to one area because I've got experience in various ways, and I like to cover a bit of commercial, mainly property, maybe residential, some vendor advocacy, and occasionally interstate buying through my contacts. And that's me.
Thank you very much, Mike. It's very informative to provide information for our guests this evening. Our second speaker tonight is Mr. Docherty, Patrick Docherty, and he is speaking. Patrick is a mortgage broker, Melbourne Mortgage Centre. He founded it Melbourne Mortgage Centre over 10 years ago, and it has grown into a successful mortgage broking practice, largely through client and professional referrals. He has built his business and reputation on the back of his core values of respect, trust, and peace of mind. And he established his company after experience in the property investment industry and a period operating as a mortgage choice broker. Patrick is a strong contributor to business and community organisations as well, particularly Rotary. And through his knowledgeable and calming manner, he provides an education and facilitation services to give his clients the best options and then gets the job done. Please welcome Patrick.
Thank you very much, Anna, for that lovely introduction. So yes, welcome everyone. So Melbourne Mortgage Centre, yes, we have an experienced team. So Mike finds the property, and obviously most people these days need a loan as a vehicle to acquire that property. And we've got an experienced team. Me personally, have been in the mortgage broking business since 2003, so quite a long time. A few facts about the mortgage broking industry. Pre-pandemic, 65% of all mortgages were managed by brokers. So when I first started, it was very low, and it's gradually built up in small increments, and now 65%, and then before the pandemic, and now over 70%. So the mortgage brokers have been an agile type of business where we can, I think the new buzzword is pivot to help people, whether it's electronic Zoom or whatever. We can manage the process during these lockdowns. And the thing with mortgage brokers is that we work for the customer and not the banks. So we're a fully accredited specialist with our own credit license, which is a great point of difference, and a 7-year, 10-year full member of the Mortgage and Finance Association. So we run a transparent and fully compliant practice. So it is us peace of mind and also our clients peace of mind. So why use the services of a mortgage broker? So the real point of difference, as I mentioned earlier, we work for you, not the banks, and we provide real choice. We work with multiple lenders, not just one, so keeping competition alive. We can negotiate a better outcome, and we help you at a time and place that suits. So we're mobile. We do have a lovely office, but we're mobile where we can come and see you when people are at work or after work, or when we're allowed back in people's homes. And our aim is to educate along the journey and also save you time, money, and the stress involved in getting a new home or a first home. And one of the great things about mortgage brokers is that our service and experience is of no cost, as we are paid by the lender for introducing business to them. So it's a win-win for everyone. Getting a loan. There are a lot of hoops to jump through when applying for a loan. It can be a daunting task if you don't do it on a regular basis, which most people don't. However, at Melbourne Mortgage Centre, we manage the whole process from application right through to settlement. We know which lenders have got appetite for which circumstances. So in this current environment, lenders are changing policies on the run, with some lenders even discriminating against certain industries. So we know about all those, and we know where we can place deals successfully. So what are lenders looking for in a home loan application? So if you're on this journey for the first time, or if you've completed an application before, things have changed in recent times. But generally speaking, the lenders look for good conduct of payment of existing loans on time. So that's probably an obvious one. They're not going to lend you more money if you can't pay your existing loans on time. So they like limited discretionary debts like credit cards, car loans and personal loans. They don't want them maxed out and bad conduct. So if you can display that you've managed credit well previously, that's a big tick in the lenders, all lenders' eyes. And for first home buyers, a consistent savings pattern is vitally important. Small amounts on a regular basis. Lenders love a plan to realise a savings goal. So if you're embarking on this journey and you've got a plan to say, well, I want to get into a home in 6 months or 3 months or whatever, and you need a certain amount of money and you start that savings plan, that's what the lenders are looking for. So consistency, good habits. And another thing that they look at is a comprehensive budget to monitor your living expenses. So the lenders encourage good habits early and closely monitor discretionary expenses. So they look at your salary hitting your bank account over 3 months, look at the ins and outs to make sure that you're not going to be in hardship once you take on a mortgage. And stability in employment is pretty good. It is pretty important, I should say. Usually at least 3 months in your current role. So the banks want, it's all about paying the loan bank. So they want stability in employment. And so 3 months is like a minimum, but there are lenders on our panel who can help you out with less than 3 months. So some current specials in the market at the moment. So home loan rates from 2.19. I laugh because it's unbelievably low. 2.19 is so low, so it's never been a better time to take advantage of the current market conditions with rates so low. And first home buyers, there's no stamp duty, like Mike said, to certain levels, and there's grants available from 10,000 up to 25,000. So it's a great leg up if you're looking to get into the market with some government assistance. There's some lenders out there that have, if you've got a smaller deposit, normally they're like a 20% deposit, but if you haven't got that, there's still chances to get loans, and some lenders can do it on a 15% deposit, and there's a huge saving of mortgage insurance, almost 10,000 in fees, which is absolutely massive. I've got some actual case studies, actual loan scenarios that Melbourne Mortgage Centre has recently completed. So these were first home buyers, purchased a new unit in Warragul in country Victoria for $195,000, and they needed to borrow $185,250, which was 95%. So they had 11,000 saving, just over 5%. They had no stamp duty was payable for first home buyers. So this young couple will be paying off a home with repayments lower than their current rent. So they're able to get into the market with a low deposit, so 5% deposit. Here's another example from first home buyers, both professionally employed, recently purchased in May for almost $1 million, 990,000. They had a pretty good deposit, 150,000, and they borrowed 85%. As I mentioned earlier, no mortgage insurance at 85% with some lenders. So I was able to find a solution that saved them 10,000 in fees. Like, it's just absolutely massive, that niche that some lenders have got at the moment, encouraging the first home buyers to enter the market. Here's another one. First home buyers recently purchased $635,000. So husband and wife, combined income, $118,000. And they had limited savings. They are currently renting and had limited savings. So their challenge was they always had a dream to get into a home, but they were renting, and they didn't know what the plan was. So I sat down with them back in about a year ago now, actually, and we worked out a plan, and it was to utilise the equity in their parents' property to support their new purchase, so family guarantee. So that was it's very, very popular in the first home buyer market. So they had a combined income of almost 120,000. So they're able to borrow the lot, 100% of the purchase price. And as first home buyers, they had no stamp duty payable. So their out-of-pocket contribution was $2,000 in fees, and it got into a home. Like, that's an amazing outcome for these guys. And so I would say it's certainly, once you have a scenario, you never give in, and there's opportunities out there for all different people. Our recommendation at Melbourne Mortgage Centre, if you're embarking on this journey, whether you're a first home buyer or a seasoned home buyer and looking to upsize or downsize or get another property, is to organise a pre-approval. In this current climate, there's a lot of changes happening with lenders, and no cost or obligation, and it will formalise your borrowing capacity with the lender. So it's a real no-brainer. If you're going to spend, you know, $500,000, $600,000, $700,000 on a property, why wouldn't you get a pre-approval? No cost for obligation. This will give you the confidence you need to purchase, knowing a lender has already completed their loan due diligence. At Melbourne Mortgage Centre, we're here to help make it easier. If there's something you don't understand or need an explanation, more of an explanation, please pick up the phone or email. Thank you very much.